Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I am your host, Whitney Sewell. Today, our guest is Steve Moskowitz. Steve is a wealth of information. He was a CPA, then became an attorney. He's had much more schooling than I would prefer to have, but he's a professional now. I mean, he knows the tax code. He knows the law around real estate investing. He goes in deep, about passive cash flow with the tax loss and how to do that. He talks about becoming a real estate professional, the importance of cost segregation, Delaware Statutory trust, and even we talk even more in depth about some tax changes with this new administration. He talks about ways that potentially you should be setting up your portfolio right now for these new changes that are coming soon. I asked him about just the likelihood of some of these things, and he believes you should expect them to happen. But he goes into different things that you need to at least be aware of that are options, right? And so you really need to have someone like him like him on your team that has those expertise to look at your personal portfolio and investments and strategy, and so you're making the best tax decision. But I hope you learn a lot from the show and at least have some things to do some research on, so some different avenues that will help you the best. Steve, welcome to the show. You have some skills that anyone that's listening right now, I know, needs to know about. And it's going to be an interesting discussion today, I know, just from your expertise and background. But give the listeners a little about your background and what your focus is today, just as your day in, day out job and people you're helping.
I'm a tax attorney and the head of our law firm. Before I was a tax attorney, I was a CPA. So in addition to understanding the tax laws, I actually understand how they operate, the number crunching, and even the forms they go on.
It's interesting to, if you have an attorney that's also been a CPA, there's so much combined skills there that no doubt you can help with. And especially now that you're a tax attorney. Well, I'd love to just jump right in now because I know you and I had a great conversation or you were just sharing so much with me before we even got started, just about the new administration and some tax changes, things that potentially could be happening sooner than later, and things that the listeners I know need to know about, and maybe some things they could be putting in place now. So maybe we're paying less taxes, right? So we're trying to have that positive cash flow, right? And less taxes. So let's dive in there a little bit. Could you just get us started on some of the tax changes that the new administration is looking to make, and some things we should be thinking about as real estate professionals?
Absolutely. First, President Biden wants to make massive changes to our laws, and a lot of them are going to affect real estate taxes. One of the things he wants to do in the estate tax area, he wants to drop the current exemption down from $11.5 million to $1 million. What that means is an awful lot of people would then have a taxable estate. There's an awful lot of people that have less than $11.5 million, but more than $1 million. President Biden also wants the estate tax rate to be about half. So think about it. Instead of giving your hard-earned property, the real property, to your loved ones, give half of it to the IRS. And you say, well, wait a minute, real property isn't liquid. Do I chop off the top floor of the house and give it to the IRS? No, a lot of times people would be stuck selling the house because they didn't have the cash to pay the taxes. You don't want that. So there's a lot of things you can do. Right now, what we can do is set up an estate plan where you give the property away to your kids. So think about this. Suppose you say, well, you know what? I have a property and it's fully depreciated. And what I'd like to do is pass it on to my kids. But you don't want to get hit with the tax. So let's assume you gave it to them now. While you have the $11.5 million exemption, there's no gift tax, there's no estate tax. And then you say, oh, this is wonderful. I'm not have to give that half to the IRS. But then when somebody gives you something nice, some people, instead of saying thank you, say, I want more. And there's more here. So for example, if you were using this property in business, You say, well, you know what? Now I'm going to turn around and I'm going to lease it back from my kids. Then you get a tax deduction for using that property for business. The bottom line is essentially you get to write that property off twice. And your kids, grandkids, they're probably in a lower tax bracket. So with going ahead and using this property, everybody is benefiting because that same money is getting taxed less in the family. A lot of other things that want to happen. There's something called the step up in basis. President Biden wants to do away with that too. And here's what that is. Suppose grandpa bought a property when he was a young man for $10,000. And today that property is worth $1 million. What happens is if grandpa would give you that property today while he's alive, then what happens is you'd say, well, all right, I'm going to sell it the next day. I have a capital gain of $990 and pay tax on that. But if grandpa gave that to you through his estate, he died and then he gave it to you, you have a step up in basis. So instead of your basis being grandpa's basis, it's the fair market value at date of death or alternative valuation date. Let's just say date of death. So in my example, you sell the property the next day, the fair market value is $1 million. You say, okay, my step up in basis is $1 million. $1 million minus $1 million equals 0. I have no taxes to pay. That's wonderful. President Biden wants to do away with that. So if he gets his way, it would be as if you'd give it to him during lifetime. And here, what you have is a $990 capital gain. Oops, wait a minute. President Biden wants to do away with the preferential capital gains tax rate. So what happens here is you say, well, oh my God, I have to pay at ordinary income rates. That's tremendous taxes that we want to avoid. A lot of other things too. Suppose we have this situation. Suppose we have a couple that says, you know, they don't have any kids or they don't have anybody they want to leave the property to. Or some people, and even some very wealthy people, believe that if you give anything to your loved ones, it'll ruin them. So you say, well, I don't want to ruin them, so I'm going to give it to charity. That's nice, but doesn't get you any income tax benefits. So instead, you can do something called a charitable remainder trust, CRT. And what happens with the CRT, you say, okay, husband and wife will live in that house for the rest of their lives, however long that is, 30 years, 50 years, 100 years. But when the second one passes, the charity will get the property. So physically, everything is the same in both examples. The couple lives there until the second one passes and the charity gets the property. But the second way, when you set up the CRT, charitable remainder trust, an actuary comes in and does a valuation because there's a theoretical separation of the property into what you kept, called the life estate, and what you gave away, called remainder interest. Suppose the actuary determines that the amount you gave away, the remainder interest, is worth $700,000. You get a $700,000 income tax deduction today. And you say, that's wonderful, Steve, but I don't have $700,000 worth of income. What's going to happen to me? You can carry it forward for 5 years. Tremendous benefits here. But suppose your kid comes up and says, you know, Dad, I don't feel like getting the property would ruin me. And Dad says, well, you know, son, but I really like to get the income tax deduction. Is there some way we could satisfy both of them? Yes. We could set up something called an ILIT, I-L-I-T, irrevocable life insurance trust. And what happens with that is you give the property away, and there's important reasons for that. And what happens is, remember, under President Biden's proposals, our exemption would drop down from 11.5 million to 1 million. A lot of people don't know, the face value of a life insurance policy is an asset of the estate. Most people wouldn't want half of their insurance policy going to the IRS instead of their loved ones. So instead, you give it away now while there's an exemption, so no gift taxes, no estate taxes. And then what happens is your kid gets the value of the property. So everybody's happy. Dad's happy because he got the big tax deduction. The kid is happy because he got the value of the house. The only one here that's unhappy is the IRS, and that's okay with everybody. But it's legal, and we can do that. There's other benefits too. Another benefit is when you give insurance, the beneficiary can do whatever they want with the money. With an ILIT, the insurance company isn't paying your beneficiary, they're paying the trust, and your trustee is doling the money out based on the trust instrument, you get to control things even after you've gone to your reward. And this works out well because a lot of people will come to me and say, Steve, they love their kids. They trust their kids with their lives. Their kids are wonderful. But God knows what their kids might marry. And dad says, look, if my kid marries some no good Nick, I don't want the no good Nick getting their claws into my money. So you set something up like this to keep it for your kids and out of the hands of the in-laws that might misuse it or might misuse your kid if you have a divorce and things go bad. There's so much that can be done here. Another thing I'd like to talk about is, to me, the most beautiful words in the English language are positive cash flow with a tax loss. Now, I mean, what could be better than that? So you say, well, that's wonderful because physically at the end of the year, I've made a cash profit from my real property. But through different things like cost segregation, which I know you've talked about in other shows, and what cost segregation does for those listeners that haven't heard them yet, it can greatly accelerate your depreciation, time value of money. You'd much rather have the benefit now than many years from now. And another thing that happens is we say, well, okay, now I have a loss and, oh, my accountant said I can't use that loss. That's a passive loss. And with the passive losses, I can't write them off against ordinary income. But there's an exception to that. And the exception to that is if you're a real estate professional. So what happens here is if you're married, only one of the spouses has to qualify. So suppose we have this situation. We have a brain surgeon that's married to a house husband. And she says to her husband, honey, you're going to start managing our properties. Now, if one of them qualifies, then what's going to happen is they can go ahead. It's an exception to the passive activity loss rules, Internal Revenue Code Section 469. And what happens is that you now get to take what would have been that passive loss that you couldn't write it off, and you can write it off against your ordinary income. What's ordinary income? Profits from a business, dividends, interest, wages. It's tremendous. So what happens is when you have these benefits, what you want to do is parlay them, tie them together. And there's a way to do that in so much of this. Real estate is an area that's very favored by Congress, except President Biden wants to make an awful lot of changes that would really, really hurt the real estate investor. So the bottom line is, if you own real estate, right now, you want to talk with your tax person and say, hey, wait a minute. If President Biden gets his way, that's going to really hurt me as a real estate investor. What can I still do now to protect myself? But also, there's a lot of benefits that most people don't know about. One of the most common things that people will say to me when I take a new client is, Steve, wow, this is tremendous. Is this all brand new? Because I never heard of this. And a lot of times, it's not. A lot of times what happens is when people get their taxes done, they go to somebody who just fills out the boxes, and here you go, it adds up. And actually, personally, that's why I became a tax attorney, because the day I set foot in law school as a student, on day one, I already had a bachelor's and master's degree in accounting. I was already a CPA and I was doing taxes, but I went to law school because I knew I could do a lot more for a client as a tax attorney than I could as a CPA. And also, I wanted to be the guy who would be creative and say, look, you can do this, this, and this. Not the guys, oh, you can't do that, you can't do that. There's so much you can do. Another thing I like to talk about is Delaware Statutory Trust. Sometimes a client will come to me and say this, you know, Steve, I'm tired of being a landlord. I don't want to go over there and fix the sink and get a call at 3 o'clock in the morning. I can't find my keys. And, you know, somebody doesn't have the rent money. I'm tired of that. So I want to get out of that property. I just don't want to pay the taxes. And I say, well, this is your lucky day. You can get into a Delaware Statutory Trust. And what a Delaware Statutory Trust is, essentially, you go to a financial institution of your choice. And essentially, it's like a mutual fund for real estate, but it qualifies for a 1031. So what happens is you can get out of that property, not pay the taxes because you've done a 1031 exchange, and then you still have another benefit. A lot of times people will say, well, you know, I'm going to retire and I don't want to be by with me. I just want to sit on the beach and that's it. I can't really do that as a landlord because, you know, you got to watch the property or bad things happen to it. So instead you say, well, wait a minute, if I do the 1031, when I need some money, I'm going to have to cash out and then I'm paying a big tax. I can put the money in the bank or invest it in the stock market if I want to take the risk. But the real wealth, the major wealth in this country, in the world, is real property, not stock. It's real property. And you say, but I don't want to pay the taxes and have all that other money sitting in the bank from the property. Delaware Statutory Trust is perfect because you have shares. So you only sell what you need. You only pay tax on that little bit, and the rest sits there and earns money, and you have these benefits. So there's just so much you can do in the real estate area. That's why we even, in our law firm, we even have a real estate department that handles all this. So we handle the real estate, we handle the taxes, and then all this stuff comes together. Same with the estate planning. We have an estate planning department in the firm. And you say, well, wait a minute, here's a way that we go ahead and put all this together and benefit. So what we want to do is, first of all, we want to make you happy. And I'm real serious about that. Where I'm different from most financial guys. Most financial guys figure up some financial plan. They say, this will save you the most taxes or whatever else. But they don't consider the person's lifestyle, what they want. And I can't begin to tell how many people will come to me. They went to somebody else did something. They say, Steve, I hate this. Can you get me out of it? And the answer sometimes is yes, and sometimes is no. But what happens is you say, well, okay, how do I put all this stuff to benefit me? And I could be representing twins. And what they want could be very, very different. So the first thing I ask people is, what do you want? What are your wishes, your desires, your hopes, your dreams? And then once I know that, I say, okay, if you want to do that, then here's the way we do it. And here's the way we take the maximum tax advantage. And what people miss in the tax system, excuse me, is that everybody thinks the tax system is extracting money from you. And that's one of the two purposes of the tax system, extracting money. But the other purpose is, in a democracy, the government may want you to do things like buy a building, but they can't order you to buy a building. So how does the government get you to do something they want you to do, but they don't have any power to order you to do? They give you a tax incentive. They say, well, we'd like you to buy the building. Can't make you. We'd like you to. So I'll tell you what, you buy the building and here's all the taxes you'll save. Now you say, wow, that's gotten very attractive for me. So what happens is, that is why you look at Fortune 500 companies that make profits with billions in B, don't pay any taxes. If you think about it, think about your little corner grocery store, mom and pop. You know what? Mom and pop are paying more taxes than Apple. Can you imagine that? Mom and pop are writing a check to the IRS and Apple is not. So you have so much you can take advantage of in the tax law, and the real estate area is especially rich in this area. There's so very, very much. And that's why, I like to talk about the real estate professional to write off those losses, the cost seg, the time value of money, Delaware Statutory Trust. And then it's so very important to tie it with the person's lifestyle, not to mention their wishes. You tie the income taxes and you tie the estate planning all together, and you get a big, wonderful package. So again, to me, the most important thing is just letting people know this exists. Because if you don't know it exists, you walk along, you say, it's so unfair. I have to pay so much taxes. Who do I make that check payable to again? And these are things that I've dedicated my professional career to, and saying, hey, you know what? The big boys take advantage of this. The non-billionaires, the non-corporations can take advantage of them too.
Are you interested in automatically collecting investor commitments and processing distributions? InvestNext offers these features and more, giving you the opportunity to manage your entire portfolio on one institution-grade platform. At LifeBridge Capital, prior to partnering with InvestNext, our team struggled to provide visibility for our investors. We needed the ability to share data on our projects, process payments, and view performance all in one place. Since adopting InvestNext, my team has the tools they need to effectively manage the entire life cycle of each syndication. From capital raising and waterfall calculations to distribution payouts and securely delivering K1s, we have everything we need in one platform. These features give our investors access to all their data in one place. We no longer are wasting time fielding basic investor inquiries about their investment performance. They're able to log in, see all of their documents, view their capital accounts, as well as invest in any current offerings, all from their mobile or desktop browser. If you want to learn more, book a demo at investnext.com and enter the promo code Whitney for 15% off your first 3 months. It just shows, Steve, why we need somebody like yourself on our team. And often it's, a real estate attorney and CPA, two separate entities or two separate team members. But it's interesting, that you and your office can have that in one place. But no doubt, as the real estate investor, there's no way we can also be a tax professional. We have to understand a lot about, or at least, like you said, be aware of these things so we can come to somebody like yourself to say, hey, this is what I'm trying to do. Will this work? Or what do you suggest? Right.
Absolutely.
But I wanted to back up a little bit though. And when we were talking about the changes about the new administration, how likely do you see those things happening? I mean, you mentioned like numerous things, the 11.5 to 1.5, the step up in basis, doing away with that, and all those different things. How likely do you see those happening, and what would be that timeline if they do happen?
Although I'm not claiming to be clairvoyant, I'm very, very concerned it's going to happen, and here's why. When President Biden came into office, we already had a big deficit. He is giving the money away by the trillions with a T. Trillions of dollars. Where's the money coming from? The foreign countries will only lend us so much. At some point, the credit card company says, no more credit for you. President Biden was talking about borrowing a significant amount of money. I won't get into the political aspects, and, we're having some differences of opinions with some countries we used to borrow a lot from. But besides that is, how do you pay for all this? Raise the taxes. In the current administration, their current philosophy is transfers, tax, and spend. I think it's very likely. And what happens is that I think real estate investors can suffer some real discrimination here, because in the whole country, when we talk about the American dream, that's having real property. Most people don't. And you have somebody that's just getting by, and you have somebody else that owns multiple real properties. Politically, I say, well, that's not fair. That guy has all that and I don't. Tax him, the old tax the rich, eat the rich, all that. What is rich in somebody's mind is very, very different than somebody else's mind. And maybe rich is somebody that has something more than you. Your next door neighbor could be rich if he's making more money than you, in your opinion. So I'm concerned with the present administration and the people and the Congress, that they're going to go ahead and say, well, you know what, that's just such an unfair tax break, step up in basis. That's avoiding taxes over the generations. And again, you see in this country, there's a big movement saying, hey, it's unfair for the families to keep the money. The only thing that's fair is give it away, give it to the government. That's fair. So I'm concerned about all these things. And, politically, when somebody says, oh, there's currently, suppose you're a guy that's just getting by and making your monthly payment to the credit card, and you hear, and you don't really have much of anything, and you hear some other guy's got $11.5 million exemption, so he doesn't pay taxes and keep the money in the family. How politically, the guy says, yeah, I'll vote for the guy that takes that away from him and gives me a little something. So I'm very concerned about this. Not to mention the fact that what we've talked about.
What about, anything, when would you see these things taking effect? Would it be this calendar year, like 2021, or would you see certain things even being grandfathered, that it may take some time before they would be in effect? Kind of how much time would you see, investors having to make some of these changes?
I always say get ready now, because there's so many government programs. On the other hand, I'm talking about these programs where, for example, there's something called the ERC, Employee Retention Credit. With the Employee Retention Credit, the government will give you up to $33,000 per employee if you otherwise qualify to cover 20 and 21. So for example, if you have a company with 10 employees, the government writes you a check for $330,000. Isn't that nice? It's free money. It's a gift. The government is not taxing you. It's not a loan. They're giving the money away. With the pandemic, the government is giving away the money. Right before I came on with you, I was on the radio talking about this, and my clients are coming to me and saying, Steve, here you go. And, we're preparing these for clients and getting them six figures. And where's all this money coming from? And one of the things I'm cautioning is that right now this is great. We have the stimulus programs, and that's great. And we have this program and this program and this program, and that's wonderful. But where's all the money coming from? And the current administration basically kind of sets the classes against each other and says, oh, well, you have something that's not fair. Let's give it to somebody else. Well, that's communism. And we've seen how communism works out well in other parts of the world. So obviously, anybody in business like we are is very much against communism. But a lot of people like it because they say, oh, well, terrific. I get something from somebody that they're jealous of. So you should at least be aware of this, because these are not things you're going to do overnight. And if nothing else, it's kind of like, having that emergency bag prepared where if your house catches on fire, you grab the bag and run out the door, and you have your important papers and your medicines and your irreplaceable photographs of grandma, and you have it ready. If nothing else, have it ready. And then when you start to see these things move, you can quickly do it. Because if you say, oh my God, they're going to change it to be tomorrow, it's going to be too late.
No doubt. Wow. Great advice, Steve. I mean, you've listed out so many things. I hope the listeners paying attention, because I don't have any doubt that many of these things are going to happen, and we do need to be preparing now. And the only way most of us can prepare for stuff like that too is by talking to a professional like Steve to really think through exactly what Steve said earlier. Like, what can I still do? And what should I do? And this is the outcome I'm looking for. What should I be putting in place now to make those things happen? Steve, we're going to jump to just a couple final questions because unfortunately we're out of time. But man, just some great value for the listeners, especially as real estate investors, as each of the listeners are investing most likely passively or actively one way or the other in large real estate. What's the number one thing, Steve, that's contributed to your success?
Caring about people and caring about the individual. I have a very heavy tax background, and most guys like me who have this kind of background go to work for the big firms that the clients of the Fortune 500. That's how I started out too. And it dawned on me, you know what? I could be the best guy or the worst guy. I'm not going to make a difference to a Fortune 500, but to a small business person or an individual, I can make a tremendous difference. I can make the difference between them retiring wealthy and them retiring with a pile of canceled checks to the IRS. And when I went out and I started my own practice, I got a tremendous thrill out of helping people like that. And to this very day, I still have that thrill every time I save somebody money and put them in a wonderful position because they legally didn't have to pay those taxes, like the big boys.
That makes so much sense. I appreciate that. My next question and the last question is, how do you like to give back? Maybe you can answer that, but it sounds like you just did.
Well, I like to give back in a lot of ways. I certainly have charitable pursuits. You may know I'm also a television and radio commentator, so I'm able to spread the word to a lot of people through TV and radio. And I do want to help people. I started out very humbly. Before I live here in California now, but before I was a tax attorney, I was a CPA. Before I was a CPA, I was a New York City taxi cab driver. So I had a very humble background. I went to school at night for years and years and years. So I have an appreciation of what it means to, come up from nothing and do something. And I want to help so many others do that. And everybody can do it if they want to. All you have to do is say, you know what, I want to do this, and you can.
It is a decision that has to be made, no doubt about it. Steve, just congratulations, your success. And even sharing that a little bit right there, I think that's just motivational to listeners too, that think, you know what, there's no way that I could be where Steve is or where Whitney is or all those things, but you can, and you do have to start somewhere and take some action, no doubt about it. Just like Steve did, going to school at night and whatnot as a taxi cab driver, and now look at you. Well, Steve, grateful to have met you and had you on the show. Just some amazing information today that the listeners need to know about. No doubt about it. You've definitely raised awareness around numerous topics that they need to contact you or somebody and get some information on. And on that note, how can they get in touch with you and learn more about you?
They can call us at 888-TAX-DEAL. That's 888-TAX-DEAL, 888-TAX-DEAL, or MoskowitzLLP.com.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.